This is Triple Take on Bloomberg, and today we are focused on SPACs, those special purpose acquisition companies. And so far, we have discussed the shift in investor sentiment and also the regulatory issues surrounding those companies. Now we move on to our third take, where we get some perspective from someone who actually is running a blank check company. Kyle Cerminara is joining us right now. He's the CEO of Fundamental Global and chairman of FG Financial Group. He runs 4 SPACs, 2 of which have closed and 2 that are seeking targets now. And Kyle, we spent the first couple of discussions here kind of talking about all the problems going on with SPACs here. Maybe you could kind of give us a case here for why maybe it's still attractive, not only from an investor standpoint, but for the companies themselves that end up using your SPAC as a vehicle to go public.
Absolutely. Yeah, thanks for having me on. I think if you look back at the SPAC market, it's been around for, in some way, shape, or form for over 20 years. And there was a boom in the SPAC market the last 2 or 3 years where some players got into the market to sponsor SPACs that probably shouldn't have been in the market sponsoring SPACs. We think that there's several hundred of those in the market right now that will likely liquidate. At the same time, you have experienced sponsors that have backgrounds in investing, running companies that can provide an alternative to an IPO. And we think that this SPAC does exactly that. So the IPO market is a vibrant market. It's one that can provide for opportunities for companies to go public, but we think the SPAC market is just as good of an opportunity for especially smaller companies to consider going public, which is why we focus most of our SPACs on being a smaller in size relative to some of the mega SPACs you've seen.
And talk to us about some of the individual work you're doing. The 4 SPACs, 2, of course, that you've closed, and I believe here a few that are still seeking targets. How do you seek targets in this, A, volatile environment, and B, an environment where valuations are being questioned in ways that they haven't for a couple years?
Absolutely. So I've been an investor for over 20 years. I was at T. Rowe Price, and after that with Steve Cohen at now 0.72. So I have a pretty good sense of what I think the institutional investor market is looking for. I think that we think of doing a SPAC as it's a lot of hard work. I think some people got into the market thinking that this was a nice post-retirement thing to do, but it's a lot of work. It's very hard. We spend every day looking at 5, 6, 7 targets and evaluating them and determining which ones are the best for us to potentially do a deal with. Many of them are not attractive. We've looked at some of the companies that have gone public by a SPAC with other SPAC sponsors, and we passed on those deals. And at the same time, we found companies that we think are very attractive, have substantial revenue, have substantial EBITDA. And for whatever reason, I think the SPAC is a better alternative. They have the certainty of understanding the valuation that they're going to be getting relative to an IPO where you find out the valuation a few hours before pricing. There's flexibility in terms of the way they structure the transaction. So SPACs have a lot of potential benefits relative to the IPO market, but at the same time, the IPO is an alternative as well to go public. So we don't think it's a this versus that. We think it's both of them are viable options.
Carl, going forward, will retail remain some sort of source of liquidity within the SPAC market and when raising these sorts of funds, or will this really return to a more professional investor kind of an area?
I think just like any stock that trades in the public markets, retail and institutional investors play an important role. So the institutional market is an important market for SPACs. I think they play a point in doing due diligence, just like the SPAC sponsor would do, and just as the investment banks are proposed to be doing on the de-SPAC process. But I think retail investors have benefited in certain SPAC transactions and in certain IPO transactions from owning those, and they will going forward, just as they have in the past. When you look at some of the companies that have come public via SPAC in the last 12 to 24 months, it's certainly some of them have not performed well, or many of them have not performed well.
Yeah.
At the same time, you have a market that has not performed well overall, and many tech stocks that are down 75% plus that didn't come public by a SPAC, that have been public for 20 years or have been public for 1 or 2 years and went public the traditional route. So I think the SPAC market's probably taking a little bit more finger pointing than necessary, but at the same time, I understand we shared a lot of the concerns about the new SPAC entrants that came into the market.
Really appreciate it. Kyle Cerminara, CEO, of course, of Fundamental Global, bringing us sort of a nice perspective to the shows. We're taking a look at all the different angles between sort of the price performance that's come down, then, of course, the opportunities that are still out there. And, of course, we still have our final take, which is next. This is Bloomberg.
Welcome back to Triple Take. Time now for our final take, a focus on SPACs today. You talk about the hundreds of billions of dollars raised by a lot of these blank check firms, and you look at the performance, guys, of what we've seen out of the ones, at least the ones that actually did make it to the public markets here. I was looking at a stat here. There were 186 of these blank check mergers, basically reverse mergers, that were announced last year that actually did come to completion here.
Not bad number.
What percentage of those do you think are actually trading above that $10 listing price?
10%.
2%.
5%.
Yeah.
Just 5%.
Well, and this sort of brings up this idea of that's what capital markets are. You can bring anything at any time if the market accepts it. But then, of course, there is going to be a revaluation. And unfortunately, if it's investors above that $10 share, then they're the ones getting hurt. But I think at the moment, I remember every single day was a SPAC, a SPAC, a SPAC. And at some point, it felt a little frothy.
Certainly did. And it's interesting, of course, that many feel that the IPO route is a better route for the bigger companies, at least. IPOs haven't fared much better, to be perfectly frank.
But, I mean, to the point, though, that I think Howard Susskind is making, too, the idea is that they are sort of gatekeepers when it comes to the IPO to make sure that what's being brought to market is, I guess, what it says it is. Doesn't necessarily have to be a good company. It just has to be what it says it is. And I think the big issue with a lot of these SPAC companies, there's been a lot of concern that maybe they're not necessarily representing themselves. So the folks are, in some cases, not representing themselves at all. There's some very notable SPACs out there. They haven't even filed their forms yet, despite the fact they were supposed to. So how do you know what you're getting? And I think that's the real issue.
And even if there is proper disclosure, the market at least now re-rating everything. And growth at any cost doesn't work. Losses at any cost doesn't work in this environment.
And maybe the irony is that now we're going to get the quality. That if you're going to use this particular special purpose acquisition company, this is actually when you're going to do it in the right ways, the right means. And once again, perhaps everyone's just left out this time because we've decided to re-rate.
Yeah, and there's a broader discussion here to be had at some point in time that maybe not every company needs to go public. Maybe they should just be private.
Okay, Twitter.
There's still a fair bit of...
That's right. You know I'm a big Elon fan, right?
Oh, Twitter should maybe be staying public. It would seem many debating whether that's going to be indeed the case. We're going to hear that probably debated in the next show, hey? Who's hosting Bloomberg Technology today?
Only if you want to watch.
Taylor, this is Bloomberg.